I think the biggest story is the increase in net interest margins. The rapid increase in rates from the Fed are basically running through our entire portfolio, certainly in Singapore, increasingly now in Hong Kong, and the US dollar book as well. So our NIM went up very sharply for the quarter, and our projections for NIM increase in the third and fourth quarter are quite robust. And if that is the case, then yes, it is the story of net interest margin increase will propel the business along. It will, a rising tide carrying all boats.
Right. So rising rates are going to improve this segment. But I do want to ask you about your thoughts of the flattening yield curve. We've seen the differential between short-term and long-term actually tighten, which could make it more challenging for banks to borrow in the short end and perhaps lend at the longer end. Could this provide perhaps some near-term turbulence for the outlook on interest margins, even in this rising rate environment, it'll lift it ultimately?
Yeah, in most commercial banks, certainly in this part of the world, are not long-term lenders. So we actually have a floating rate book. We borrow in the short term and lend in the short term. And therefore, what really matters to us is the short end of the curve and the policy rates. We do face some headwinds in our markets business, where we do actually put on investment positions, bonds at the longer term and the longer end. So yes, you give up some of the net interest increase on the market side. But since we are structurally, fundamentally a commercial bank, it is the value we get on the short end of the lending business that really comes home to bear.
All right. So the outlook will also depend on the macroeconomic environment. DBS did highlight earlier in the media briefing that there's still a lot of uncertainty that really clouds the outlook, especially coming also from China. We do note that there's a lot of question marks on the property sector there and exposure to real estate. That's now raised questions about how exposed banks across the world are here. Based on what you're seeing from DBS, how exposed is DBS to some of these question marks, and what steps have you folks taken to perhaps make sure that you're shielded from any potential downside or worst-case scenarios coming from this very important sector?
Well, as you know, we're an Asia-centric bank, and therefore we do have businesses in all the big countries in Asia. China is no exception. Having said that, China has been going through ups and downs for the last 2, 3, 4 years. And so we've been managing our portfolios very judiciously over this period of time. We've been stress testing most of our portfolios for rates, for property price collapse, and all the usual stuff. And at this point in time, we're actually relatively comfortable with the quality of our book. I think asset quality remains quite robust.
All right.